Hello, hello, hello. Welcome back. This is Enda here with the weekend video update. Hope you're doing well. I'm just going to smash straight into this and see where we go. All right. This is the short-term chart. It's the hourly chart on euro dollar. And this week we were looking for a turn down. I'm not quite so happy about this turn down just yet. So far, the part that's kind of really causing me a little bit of let's say trouble is this rally into the high looks to be in three waves. So unless I'm missing something completely here, which I don't think I am, this could still be part of this whole corrective process here. Now we've come down. I'm looking for a larger, like a D wave of this triangle, this ongoing triangle that I'm following in. That's the daily chart there. So we're topping out in a C wave, and I'm looking for a fall down into a D wave. But so far that's it. It could be three waves down as part of a corrective process within this larger move, or this could be the beginning of this next D wave down. Wave D should be in three waves, so it should be an A, B, C, as you've seen marked there. Now, the move off the high, kind of betwixt and between on it yet. It really hasn't kind of fleshed out enough to be able to pin it down. It could be five waves down in A. So we could have A done, and maybe we're about to rally in three waves up in B, and then we fall again in C. It could be just A of A, so it could be a larger 5-3-5 pattern in A, or it could be A, B, C yet to complete in A. So I'm expecting some sort of a corrective rally at least. Beginning maybe late Monday or early Tuesday, and this will probably begin with B. For the moment, I'm kind of betwixt and between on what's going on off the high, but I think it's enough if we discount what happened here. Again, actually, this could be now that's just after coming to my head. See, this is why I like talking to you guys. You just tell me things that I've just missed. This could be a triangle fourth wave. This could be an A, B, C, D, and E, and then a thrust from a fourth wave to complete wave 5, and then down. I'm happy with that. Okay, let's move on. That'll be wave C there. Wave D. Let's put it in there, actually. Why not? D and E. Okay, now we've got a triangle and a thrust from a triangle and a breakdown below the previous fourth wave low, so not so bad. What's happening in this short-term pattern off the high is still it's up to the market to sort that out. I do think we've got a bearish lower high coming in either wave B or a lower degree wave B. So one or the other. So let's see how Monday pans out. But for the next few weeks, it should be to the downside in wave D, a larger wave D. And this is wave A of D. All right, move on. Here's pound dollar. Three waves down, although it looks like a flat. It's what I was looking for, but the rally in the meantime to that slight lower high, it kind of just causes a little bit of a pause for thought, because I wouldn't have expected a wave A down. Not that it can't be like this, but I would have expected it to be a little bit more elongated. Maybe the anti-dollar sentiment has held it up. It's definitely held it up at these highs for a good while. But that's definitely three waves down. Let's see if we can get three waves up to complete a B wave, and then we head lower again in wave C. I'd definitely like to see wave C of A push down towards, that 127 handle. That would really kind of take the heat off the market for a while anyway. So we've got at least three waves down. So we need a corrective lower high in a B wave, and that should lead the way into a C wave down next week. Okay, so dollar yen. Here we've started again. We've created a nice, pretty clean pattern in an expanded flat. We had 5 waves down into a wave C low, and then we kind of bounced off that. It's still, I think it's left to be decided yet what's actually happening here. I'm going with the idea that we have a possible wave 3 of 1 underway, but you could still view this wave 1 and 2 at 1 degree higher. So you could say that this is wave 1 and 2, and then we have another wave 1 and 2 to create a rally or an extension in a third wave. So that's kind of up for grabs at the moment. But I do think we are looking up for at least the short term in a third wave. Okay, so the Dow, that corrective move went on for what seemed to be an age. First, we were working with this triangle scenario. Now, this could still be a wave A down and then an A, B, C, D, E triangle. No, that's yeah, D, E triangle, and then a wave C. So still possibly a possibility that there's a triangle in the mix there. Most likely, actually, seen as the central part of that whole move was so flat and sideways. And then we spiked down to break out of that triangle to complete a fourth wave. So it's probably a combination fourth wave. And now we're moving up into fifth wave. You can see the alternate count here. This could still be a fourth wave at 1 degree higher. So we've got a 1, 2, 3, 4, 5 pattern operating. Either way, it still suggests a completing or a completion or a completing pattern. I know it's gone on forever and a day, but the breadth numbers that are coming out and the just the complete lack of momentum over the last few weeks does speak to a larger kind of rotation off a top. And we've definitely got a major non-confirmation between those high-flying indexes, the S&P and the Nasdaq, and your common or garden Dow. So you could call that a Dow non-confirmation of that high. So B waves are again proving almost impossible, or very, let's say, they're almost like mirages to follow a mirage. But that was supposed to be expected, eh? Let's see if we can complete this fifth wave next week and move on from there. Gold has been playing the game so far. There is a little bit of, I think, sorting to do here off this wave B high. We've got a nice clean 3 waves up in wave B. I think that's a flat, so we've 3 up in A, 3 wave down in B, and then 5 up in C. So it's 3, 3, 5, flat correction B. So we have 3 down in A, 3 up in B, and we should get 5 waves down in C to complete wave A. Off the high, we have a spike lower, a correction to lower high, another spike lower, 3 waves in a flat, and then another spike lower. So that could be 5 waves down in wave 1 completed at Friday's low. And maybe we're working on a higher degree second wave. So we are again trying to decide, or the market is trying to decide, whether to fall into a third wave immediately or to create a larger second wave. I think that second wave, if it does come, this larger blue second wave, it shouldn't bounce any higher than that declining trend channel line there. So somewhere about the 1960 level should hold it. And then we'd fall down in a third wave. So early next week, we're looking at a completion of some sort of a correction, and then in either wave 2 or a larger degree wave 2 in blue there, and then we fall down into a third wave. So next week should be more downside in gold, probably continuing down towards that 1780. We have this previous collection of the left shoulders here. So we have like 1790 and a lower than 1745. So somewhere around that, we've got a pretty significant support base for this A wave down. If this whole move here is actually going to comprise of the larger degree fourth wave, then I would expect probably a sharper move down over the next couple of weeks, down towards that 1700 level, maybe that 1660 level. We've got a previous fourth wave there at 1669. So if we get a sharper move down, that will move the whole correction up by 1 degree. So we will move this wave A here up to the larger degree wave A. So we've got wave A in red, B in red, and then wave C down in red. Either way, still expecting a little bit more downside, or a little bit, probably a lot more downside for the moment in gold. We'll see how that plays out. Okay, so crude oil. The action is just pretty confounding, to be honest. I'm looking for a three-wave pattern up to complete an ending diagonal in wave C, or sorry, an ending diagonal wave 5, an ending an ending diagonal in wave C, and this final three-wave up would be wave 5. So you've got an A, B, C, but the action is it's a little bit worrying. If I were to expect a further high, it is a little bit worrying. We seem to be breaking down to the downside, breaking down rather than building. And now this can all be at the completion of a very complex triple combination, probably B wave, and maybe one of those very rare kind of unicorn patterns, this kind of trombone pattern here in a C wave to complete wave B. But again, that's a higher low, you know. It's intriguing, to be honest. All in all, I think we are kind of churning towards the end of this major rally in crude oil, and the next move will be to the downside. But I'm a little bit concerned on expecting a final high. But we could break down completely from here. That's the kind of slight concern. Anyway, for the moment, I do want to see a three-wave pattern complete. That would be ideal, up around that 44 level, and then collapse an impulse wave lower. Okay, so here's the S&P. We've got three waves up to complete up towards that all-time high again in the S&P. I think this is still all part of a fifth wave, but this internal pattern is perplexing, to say the least. I have been following an ending diagonal pattern here. That'd be kind of like a 1, 2, 3, 4, 5 up to that new all-time high. It's still wave B, so it's still probably part of an A, B, C pattern. And wave C itself is an ending diagonal, so an ending diagonal within an ending diagonal probably does explain the very narrow or declining breadth and the very narrow leadership in the rally, which I'm sure you've all seen the charts on. The breadth has pretty much just collapsed off a cliff over the last few weeks, especially over this last week, especially in the Nasdaq as well. So if you took out the top 5 stocks out of the S&P and the Nasdaq, there would be no such thing as a rally, and there would be no such thing as a new all-time high. But anyway, that was an interesting joke that they should rename the S&P 500 the S&P 5. Why are we complicating things? Because it is really only a rally of 5 stocks. Okay, so suffice to say, we're just waiting for this pattern to end, and we've got nothing to work with on the downside yet. And once we do get that, we'll be here. Yes, I'm working up here. Okay, I'll be down in a minute. No, I will be down in a minute. Okay. Now, so another interruption. I thought I'd get away today without an interruption. Okay, so let's move on to silver. It's the 4-hour chart in silver. You can see we've got 3 waves down, 3 waves up, and continuing a pattern lower. The move off the high yet has not been convincing. You can see it's a very hasn't been very convincing to the downside. So I'm trying to manage a 3-year-old and do this work at the same time. It's lucky I don't have a camera running. Okay, so here is the hourly chart. So 3 waves down in A, it should be 3 waves up in B, and that's again a flat correction up. We have 3 up in A, 3 down in B, and then a 5-wave rally in wave C. And off that high, it could be that we're seeing a 3-wave decline in wave C, the larger 3-wave C here. And maybe now we're wave C of C is actually going to trace 5 waves down. Again, yet to be decided. But for the but for the moment, I still want this trend channel to be filled. I want to see a larger 3-wave pattern, and I don't read this as an impulsive move up yet. I don't think it is. Okay, so we'll go on down. So next week we want to see this pattern continue to break, or the price continue to break down. And maybe next week we'll have a completion of wave C and wave 2. Now the distraction has gone, so we can move on to our beloved Bitcoin. I am looking at a possible 3-wave move down in A. Again, this move off the high, if it's 5 waves down, could be wave A complete, and maybe we have completed wave B also. But I'm going to allow a little bit more to the downside, I think. We have a previous 4th wave, it seems, here at all the ones, so 11,110. And I would like to see a 3-wave decline back into this level here to complete wave A down, and then corrective lower high wave B, and then wave C down to complete wave 4. You can see here that I'm looking at I should get to the daily chart. You can see it's a 3-wave rally up in the daily chart. That's what I've been working with. A, B, and C, and the C wave here should complete in 5 waves. So I was speaking, I think, during the week there about the possibility that we have wave 3 and 4 now complete, because wave 3 could be taken at the previous high here back in May. Then you could work down. Let's spread that out a bit. You could create a triangle out of all this. So this could be A down, B up, C, D, and E of wave 4, and then a thrust higher in a triangle, or sorry, thrust out of a triangle in wave 5. So this could be also wave 5 breaking higher. It's very viable. If we do continue higher and we touch that upper, above that previous wave A high, so that's 13,830, and in Bitcoin that can happen very easily. Then we've got 3 waves up complete, and you should definitely start looking longer term downtrend then in wave C. Okay, so here is FTSE. Again, we have a continuing, I suppose, rotation into US stocks has probably run its course, I suppose. Everybody and their mother has run towards the tech stocks in the US and just driven them to complete insane highs. We've got a dearth of action or upside action in the European shares. So, or the UK shares here, we've got still the June highs holding, and a possible 5-wave down, 3-wave rally up complete, and we're moving down again. So this would be a pretty clear, I suppose. Again, you could call it a bearish non-confirmation, because you would expect, if nothing else, you would expect the FTSE to partake in a global reflation rally, and that is not happening. So it's a little bit of a worrying trend in the FTSE. For next week, if this is a wave one, or sorry, if this is wave two complete at the early August highs, the 12th of August, or it's complete back there on the 15th of July, you either have a 1-2 pattern and you're heading down into a third wave, or you've got wave two complete and you're heading down into first wave. We have the low here at wave one, so that comes in at 58.52. So a break of 58.52 could lead to a further spill lower in a third wave. Okay, so the German market is more or less the same. We've got a 1-2 pattern off the late July, the 20th of July highs. Pretty clear three-wave move up, and maybe a 1-2 pattern complete and heading down in a series of 1-2s to the downside. So this could be an acceleration pattern. You could see a larger and a little bit more worrying decline over the next couple of weeks. We have an internal B wave here, so if that should offer some support to the market if we slice through that 12,500 level, and most especially this wave one low here at 12,200. So we've got 12.5 and 12.2 to watch out for. Let's get a couple of markers in there. That could spell a spill down into a third wave. And you can see here on the 4-hour chart that we have a possible fifth wave in wave C. So where did wave C go? There you are. Wave C of B, and now we're working on an impulsive move down again to the downside in wave C. Okay, we've got the Nasdaq. We've got long-term momentum as again diverging to the downs. Even though we've got these continuous run-ups, it would, without fail, we've made lower highs and higher lows in the price. I do want to show, I think, the Nasdaq breadth over the last few weeks, which I think is very worrying. And if you let's let that load there. The short-term pattern is perplexing. A third wave here, you could add that to the perplexing as well, because you've got continuous overlaps within each move up. So it doesn't count well at all as a five-wave pattern, unless I do some kind of interesting hijinks. But it does overall count as an ending diagonal. So we've got 3 waves up in wave 1, 3 waves in wave 2. You could probably go A, B, and C in wave 3, A, B, C in wave 4, and then A, B, C in wave 5. You could, that's the A, B, and C in wave 5. And wave C here can be viewed as an ending diagonal. It can also be viewed as let's say, an acceleration in a third wave, decline in fourth, and now we are tracing out 5 waves up in wave 5. This, I don't think we see much more much more in this rally, and I'll show you here. This is from macro charts. You can see here the rally in the Nasdaq has come at the cost of a very narrow, let's say the rally in the Nasdaq has been continuously narrowing, and on Friday there we broke through the 50% level in the number of stocks that are advancing versus declining. So the breadth is horrendously low right now, and I think you could probably it's something like 26% of this rally of late has been wholly down to the top five stocks in Nasdaq. So again, it's such a narrow rally with diverging breadth, with diverging momentum, with ending patterns, with you know horrendously high overbearing, let's say, bullish sentiment, that there's no market that could live to fight very much longer in that kind of scenario. So let's see if we get an end to this final C wave in the Nasdaq, and that completes it, I think. Thanks so much for being with me during the week. God bless you all, and I hope to see you again on Monday evening, and we will venture into this madness again for another week. Have a good one. Be good. Godspeed. And until next week. Bye bye.